Sense on the kind of cuts that we've seen in gold and silver, especially last night, because gold has been on a falling trajectory, but the fall in silver has been as quick as its rise. What do you have to make of this?
Absolutely very little. In fact, the people that are observing precious metals, they're doing it as safe haven assets. I'm afraid I don't believe there are any safe haven assets, and therefore I don't spend too much time on that. And I tend out to be absolutely right, because silver, after it hit the 4,000, it fell. So did silver. You know, I have no idea why people buy those things on the full knowledge that the only way they're going to make money is if somebody is greater fool than they are and they will buy them. Good luck to them. I mean, if my clients want to buy gold, I say absolutely do buy gold on the absolute basis that the only thing you're going to make is capital gains or capital losses, because gold doesn't produce any income. And you will have to rely on other people wishing to buy gold. I mean, it's such an absurd way of making an investment. I'm buying it not because I think it has an intrinsic value or it has something that will yield. I'm buying it because I expect somebody else to buy. I'm sorry, I wish I could give you some kind of a blah, blah analysis of silver, but I don't.
Fantastic, Andrew. You've set this up very, very well. Hi, good morning. This is Harsh here. Now, Andrew, you sit in a camp of very, very few people who speak like this about gold and silver. So let me not ask you those questions. Let me get straight to the point. Income generating assets, bonds, equities, where are you sitting? And give us a sense on which geography you're sitting in as well, because my feeling is that US obviously seems overvalued to you, if I've read your views right. So is it Asia, and where within Asia are you sitting in terms of a position?
Well, okay, I'm going to be incredibly blunt, not because I know better than anybody else. I simply use a little bit of common sense. Sure. I'm afraid the nickname is going to be Andrew Buy Guns Freris, or Andrew Buy Defense Stock Freris. I've been saying that for 3 years. And I'm not changing. I'm saying it even louder. Okay, see what happened with Trump's visit in Japan. First things he said, they congratulate them for spending a lot more money on defense so as to make Japan a great, important, powerful place. So should India. Okay, you should be spending a lot more on defense. Unfortunately, that's the way the common sense tells you and what the world is going. So I like defense stocks. South Korea is the best performing index possibly in the world. Okay, it's something like 53% year to date on US dollar terms, massively outperforming S&P. Reason? Investors spending on artificial intelligence, unlike the idiocy in the United States. This is based on a combination of both artificial intelligence in terms of software and in terms of hardware, because Samsung is the biggest producer of microchips in the world, and it has done some nice deals with American artificial intelligence company. And the second thing, spending on defense. Okay, so South Korea has been doing very well on a measured exposure on technology and a measured exposure on defense. I like it. Taiwan also is possibly the second best performing index in Asia. And again, the reason behind that is exports of investment, I try that again slowly, on technology, on chips, partially on artificial intelligence, because Taiwan is a major producer of goods as opposed to software, and the index has been performing very well, despite the fact of the still hanging potential threat of a toughening posture of China once the trade deal is out of United States, with United States saying we're not going to make Taiwan part of the deal. So I still like Taiwan, despite the fact that there are issues involved. China is a very difficult call because it is an economy which is growing at 4.8%. That's extremely good. The plenum has decided that more money should be spent on consumption. And I'm not saying less on investment, but the investment has been playing down to the extent of focusing it on specific areas. But this has to be state investment as opposed to private sector investment, because I don't know how they are going to encourage their private sector to do so. Anyway, that remains a question. But it is a big, solid economy, not very exciting, but with some potential leeway upwards. United States, I will not buy the main stock index for a very, very simple reason. More than 30% of it, is accounted by about 5 stocks. Come on. How can I possibly buy an index which is based on 5 stocks and all of them are on artificial intelligence? Right. End of story. I don't touch American indexes. Not because I hate United States. That's absurd. I don't hate. I like making money for my clients. End of story.
Point taken, Andrew. On bonds, are you making money there? Inflation at 3%, but the Fed still biting the bullet, cutting rates.
We will see if they're going to cut rates, because I would like for them to explain to us how come the last 3 numbers we had on CPI and on core CPI is firmly on 3%. In other words, the trend continues to go up against the planned target of 2%. If you are asking me what they are going to do, my reaction is frankly, I don't care. All right. I genuinely don't care, because it is policy steps taken against an irrelevant kind of decision making. And I don't want to push my clients into saying, look, they are cutting interest rates, buy bonds. Only to find out that in 6 months' time, I have to reverse my position and saying inflation isn't down. They are now thinking of increasing bonds and the market will tank, let alone the fact that the S&P could tank at any time now. It is so massively overvalued and based on absolutely no valuation whatsoever. So buying bonds makes some kind of sense, only to the extent that I will tell my clients, watch it. And unfortunately, timing the market, nobody can possibly ever time the market.
Okay, Andrew, right.
Sorry, I told you geographically, I like certain places in Asia. Also the EU stock market, the European Union stock market has been performing extremely well, despite the fact the mess in France, this relatively slightly better position of Germany, and actually UK has not been doing too bad. Look, all of them have outperformed the S&P. All of them have outperformed the S&P. So had I been clever, and I was, and I have told my clients, don't put money in the States, but put money somewhere else, all of them would have made money in relationship to the S&P. I have to stress, the S&P is up. But because it is breaking records, people tend to forget that I don't care if it breaks 300 times past records, if it is the year-on-year increase makes some sense and can be justified by valuation. The level of the index has become God, and this is completely absurd.
Andrew, always great having your views. Thank you so much for coming in and speaking with us here on ET Now.
Pleasure. Keep inviting me.
We will. Okay.